Thank the Sino-American CPA Society for inviting us to participate in your event today. My name is Christine Stone. I'm a senior revenue agent for the Offshore Arrangements Practice Network in the IRS's Large Business and International Division. Since 2014, I've served as the National Coordinator for the Offshore Voluntary Disclosure Practice, which encompasses the Streamlined Compliance Filing Procedures and the updated Voluntary Disclosure Practice. Today, I've been asked to provide a high-level discussion on international tax compliance, focusing on the Streamlined Filing Compliance Procedures. For our agenda today, first, we're going to identify several options available to non-compliant U.S. taxpayers. Then we'll continue with a high-level discussion of the Streamlined Filing Compliance Procedures. And we'll end with a brief overview of the FBAR filing requirements and potential FBAR penalties. So individual taxpayers have several options for coming into compliance with offshore issues. When we use the term offshore, we mean both income tax and other reporting requirements for U.S. taxpayers that have foreign financial assets, such as foreign bank accounts. After the closing of OVDP in 2018, the longstanding voluntary disclosure practice was updated. The voluntary disclosure practice is a compliance option for taxpayers who have committed tax or tax-related crimes and have criminal exposure due to willful violations of the law. Taxpayers who participate in the voluntary disclosure practice intend to seek protection from potential criminal prosecution. A voluntary disclosure will follow regular examination rules, but we have a recommended penalty framework and a limited disclosure period for eligible taxpayers. If a taxpayer's violation of the law was not willful, then they should consider other options. For example, the Streamlined Filing Compliance Procedures. These are filing procedures, not a program like the voluntary disclosure programs. The Streamlined Procedures allows taxpayers whose failure to comply with the requirements to report offshore income and assets was non-willful to become compliant with reduced or no penalties. The Streamlined Procedures were introduced for taxpayers who do not need criminal protection and do not have exposure to significant civil penalties. So if the voluntary disclosure practice or the Streamline are not an appropriate avenue for the taxpayer, or maybe they don't meet the eligibility requirements, the taxpayer may correct past mistakes by simply filing amended or past due returns. We also have the delinquent FBAR procedures, and these are intended for taxpayers who are tax compliant but who fail to file FBARs. An FBAR is a foreign bank account report. Taxpayers using these procedures file the delinquent FBARs electronically with FinCEN, and they have to explain why they are filing late. There's also the Delinquent International Information Return Submission Procedures. And again, these are filing procedures, not a program. And it's for taxpayers who have not filed required international information returns. These taxpayers have reasonable cause. They're not under civil examination or criminal investigation, and they have not been contacted about the delinquent information returns. Again, these are processing procedures, which are subject to normal examination selection procedures, and they do not provide automatic penalty relief. However, taxpayers may attach a reasonable cause statement to each delinquent information return filed. But during the return processing, that reasonable cause statement might not be considered upfront, and penalties may be assessed. If the taxpayer receives a penalty notice or other correspondence, they should respond, including their reasonable cause statement and any other documents that have been requested. Penalties may be imposed if the service does not accept the explanation of reasonable cause. For more information about these programs, you can go to irs.gov and search options available for U.S. taxpayers with undisclosed foreign financial assets. Now let's talk about the expanded 2014 Streamlined Filing Compliance Procedures. They became effective on July 1st of 2014. The streamlined procedures are open-ended, but they may terminate at any time. And these procedures provide for two broad categories. We have the Streamlined Foreign Offshore, or SFO, and then we have the Streamlined Domestic Offshore, or SDO. SFO, or foreign, is determined based upon non-residency requirements. Those that do not meet the non-residency requirements may then be eligible for SDO domestic terms. Unlike the SFO taxpayers, the SDO taxpayers cannot be non-filers. And as far as penalty structures, it's going to depend upon which category the taxpayer falls into. Both categories provide for penalty suppression for accuracy and delinquency penalties, and taxpayers will not be subject to penalties for their failure to file foreign information returns in the FBAR. So the SFO is going to have absolutely no penalties. However, the SDO, the domestic taxpayer, will be subject to a 5% miscellaneous offshore penalty. As part of Streamline, every participant must provide a non-willful certification. And all income tax and information returns submitted through the Streamline procedures will be accepted and processed by submission processing, the same way tax returns are processed each filing season. That means all submissions may be subject to future examination, just like any income tax return filed during the normal filing season. Future compliance with income tax and FBAR reporting is required and expected after participating in the Streamline procedures. Before we discuss general eligibility for Streamline, I want to point out that in addition to the terms of the procedures that are found on the irs.gov pages, each category, SFO and SDO, has links to FAQs, or frequently asked questions, for their respective categories. And these FAQs are a great resource when preparing a streamlined submission. As for general eligibility, to be eligible for the 2014 Streamline procedures, the taxpayer must be a U.S. individual or estate. These procedures are not available for non-resident aliens filing Forms 1040-NR or for corporations. The taxpayer must have failed to report foreign financial assets and pay all tax due with respect to those assets. So there must be some unreported income. And when we talk about the failure to report income, we mean gross income amounts, not the net tax effect. So for example, if a U.S. person earned foreign wages and elected to claim the foreign earned income exclusion to reduce taxable income to zero, or maybe they elected to claim the foreign tax credit, reducing the tax to zero, they are still deemed to have a filing requirement based upon their gross income. So we don't want to confuse this with a taxpayer that does not meet the filing thresholds for filing a return. For eligibility, the taxpayer will also be required to certify under the penalties of perjury that his action was non-willful, and we'll discuss this more a bit later. Also, the taxpayer cannot currently be under civil examination or criminal investigation. If the taxpayer is under exam, they should discuss their offshore non-compliance with the examiner assigned to their case. And finally, the taxpayer must have a valid taxpayer identification number. It's really important to first determine which category of the streamlined procedures a taxpayer falls under. Are they streamlined foreign offshore, or are they streamlined domestic offshore? And the key factor is going to be the non-residency requirement. And we'll talk about this in detail on the next slide. But first, SFO taxpayer category. They must meet the non-residency requirement. They can also be a filer or a non-filer, meaning that they can submit delinquent Forms 1040 or 1041, or they can provide amended Forms 1040X with their submission package. And remember, Forms 1040R and R are not processed through Streamline because they're not U.S. persons. And part of the eligibility was you must be a U.S. person. Again, SFO taxpayers will have no penalties. There'll be no accuracy penalty, no delinquency penalty, and no miscellaneous offshore penalty. All taxpayers who fail the streamlined foreign offshore non-residency requirement and who have filed their tax returns will default into the category of SDO. The SDO, or domestic taxpayers, can only file amended returns. They cannot be delinquent non-filers. The accuracy-related and the failure to pay penalty will be suppressed. However, SDO taxpayers will be subject to a 5% miscellaneous offshore penalty. So let's talk about SFO non-residency requirement. To satisfy the non-residency requirement for SFO treatment in any one of the last 3 years, the taxpayer cannot have had a U.S. abode, and they must be physically outside the U.S. for more than 330 full days, and there are no exceptions to this rule. So in other words, they cannot be in the U.S. for more than 35 days for just one of the 3 look-back years. Again, the taxpayer only needs to meet the non-residency requirement for 1 year out of the 3-year look-back period to be considered SFO. And for joint submissions, both taxpayers must meet the non-residency requirement. If one meets the non-residency requirement but the other fails, then they will need to consider the SDO streamline. There are several examples illustrating non-residency status for streamlined procedures on irs.gov, specifically on the SFO page. And non-residency status is key because it determines whether the taxpayer will be subject to the miscellaneous offshore penalty and also whether they can be a non-filer. Unfortunately, there is no special provision for taxpayers that fall into the category of what we call snowbirds. These taxpayers do not qualify for either SFO or SDO. Snowbirds, they're taxpayers that have significant U.S. presence, but they consider themselves residents of another country. For example, we most commonly see Canada or Mexico. There are U.S. taxpayers that live in, for example, Canada, that winter in Florida. You know, they like the sunshine. Or it may be a U.S. taxpayer who lives in Mexico but works across the U.S. border every day. So these snowbirds are going to fail the non-residency test because they're not outside the U.S. for more than 330 full days. We said this is a firm rule. And typically, these taxpayers are also non-filers. And as a non-filer, they'd be disqualified for SDO treatment. These taxpayers or snowbirds should consider other alternatives for coming into compliance, which may be simply filing delinquent tax returns. So once you've determined that you're eligible to use the streamlined procedures, what are the terms? What are you agreeing to? So central to the streamlined procedures is that a taxpayer must provide a non-willful certification signed under the penalties of perjury. Each category of taxpayers has their own certification form. For the SFO category, they will use Form 14653, and for the SDO category, it's the Form 14654. So the SFO form is going to require them to certify the days they're outside the United States, and the SDO form requires them to provide a miscellaneous offshore penalty computation. In general, the certification requires a taxpayer to provide a narrative describing the specific reasons for their failures. They're to include the whole story, both the favorable and unfavorable facts. A streamlined submission must include the most 3 recent years of tax returns for which the U.S. tax return due date has passed, and this includes all required information returns such as Form 3520, 5471, Form 8938. In all these forms, you file to Austin per the instructions on the SharePoint, the irs.gov landing page. Do not send them to the directions posed in the instructions for each form. So in addition to the most recent 3 years of tax returns, the taxpayer must provide the most recent 6 years of FBARs for which the FBAR due date has passed. If there happens to be a year where the taxpayers were fully compliant for both tax and FBAR purposes, they can notate on page 1 of their certification form by writing fully compliant in the tax box for that particular year. Taxpayers also agree to retain records for 6 years and that they will provide them upon request. Receipt of the streamlined submission and tax returns will not be acknowledged by the IRS since they are processed like any other return. After a taxpayer has made a submission to Streamline, they will be expected to comply with U.S. laws for all future years, and they'll be expected to file returns according to the regular filing procedures. The current version of the forms can be found by typing the form number in the Forms and Pub search field on irs.gov, or they can click on the links that are embedded in the specific instructions that are found on the SFO and SDO eligibility pages. And we caution for you to use the most recent forms that are available on irs.gov. Some non-IRS websites may offer out-of-date forms, so make sure that you're using the most current version from irs.gov. As far as the narrative, taxpayers have to provide a narrative statement certifying that their actions were non-willful. It must be in writing and signed under the penalties of perjuries. And taxpayers cannot bifurcate activities. meaning if one activity was willful and another activity was non-willful, both activities will be tainted and considered willful. Also, married taxpayers submitting a joint certification must both certify that they are each non-willful. If they have different reasons, they can provide their individual reasons separately in the narrative statement of facts. The narrative should include both educational and financial background and anything else that you believe is relevant. It should explain the source of the funds that are held in the foreign accounts or assets. For example, explain whether you inherited the accounts. Did you open the account while residing in a foreign country? You may want to comment whether you had a business reason to open or use the accounts. You also want to explain your contact with the accounts or the assets, such as how you made withdrawals or deposits, and who made the decisions about investment and management of the assets. You'll need to provide names and contact information for any advisors. Tell us how you came into contact with them and how you communicate with them. What information do you provide them? What advice did they give you? And show that you followed the advice that you were provided. The narrative needs to be complete and thorough. It needs to tell a full story about the taxpayer, providing specific reasons as to why the income was not reported and the information returns were not filed. Now let's focus on the 5% miscellaneous offshore penalty, sometimes referred to as the SDO MOP. Again, this penalty only applies to SDO taxpayers. The first step in computing the 5% SDO MOP is to determine the highest aggregate balance or the value of the taxpayer's foreign financial assets for both the covered tax return period and the covered FBAR period. So remember, the tax return period is the most recent 3 years, and the FBAR period is the most recent 6 years. The highest aggregate balance, or the HAB, is determined by aggregating, or basically summing up, the year-end account balances and the year-end asset values. So you take each asset or account, you find the year-end balance, and you add up the total value for each asset or account for a particular year. Once you determine the highest aggregate balance for each year, then you'll look at the totals and identify the year with the highest overall balance, and that will be the year subject to the miscellaneous offshore penalty of 5%. So multiply the highest overall balance year times 5%, and you have your SDO MOP. So the assets that go into the MOP, to be a little bit more specific, you need to look at 3 different categories of assets. First, you're going to look at 6 years of FBARs. So if the asset was not reported on an FBAR, but should have been, it will be included in the penalty base. And then there's 3 years of Form 8938. If the asset was not reported on your Form 8938, but should have been, it will be included in the penalty base. And then the final category is you look at 3 years of your Form 1040s. If the asset was tax non-compliant, even if it was properly reported on an FBAR Form 8938, the asset will be included in the penalty base. Foreign financial assets are defined in the instructions for FinCEN Form 114, and that's the FBAR form, and also on Form 8938. The SDO FAQs also provide additional guidance on how to compute the miscellaneous offshore penalty. This slide has some links for resources that can be found on irs.gov for the Streamline process. The first link is for general Streamline eligibility, And then from that page, there'll be links for Streamlined Foreign Offshore and Streamlined Domestic Offshore. So depending on which category you're under, you'll click the appropriate link. And on your specific page, whether it's SFO or SDO, you'll find those FAQ links for your particular category. The final link is a helpful webinar on how to complete your streamlined submission. It covers the topics we discussed today in a little bit more detail. So that's an excellent resource as well. Now that we discussed streamlined procedures, let's very briefly talk about foreign bank account reporting, the FBARs. So in general, a U.S. person who has either financial interest in or signatory authority over one or more foreign financial accounts where the combined balance exceeds $10,000 at any time during a calendar year is required to file an FBAR. And because of this low dollar threshold, the IRS encourages taxpayers with foreign assets, even relatively small ones, to check to see if this filing requirement applies to them. And this filing requirement is determined annually, meaning that the FBAR may be required for 1 year, but not another year. And remember, the FBAR is not a tax return, but it's an information return that's required under Title 31 of the code. So once a taxpayer has determined that there is an FBAR filing requirement, they must electronically file the current period and any prior year's delinquent FBAR using a secure BSA e-filing system. And the system can be accessed at the web address shown on the slide. The due date of the FBAR for years prior to 2016 was June 30th of the following calendar year, and there were no extensions allowed. But this was changed by the Surface Transportation Act, and starting with the 2016 reporting year, the FBAR due date is April 15th of the following calendar year, and it provides for an automatic extension to October 15th. So it's more in line with the tax return filing season. So starting 2016, you have to file on April 15th of the following year, and you must file electronically. Okay, FBAR penalty structure. FBAR penalties fall under 31 U.S. Code Section 5321. The two most common FBAR penalties are for non-willful violations and for the willful failure to file the FBAR or retain records. You often hear it referenced as the $10,000 penalty for non-willful violations. And then for willful, you'll hear it as the greater of 50% of the account balance or $100,000. But recently, the code was modified so that these penalty amounts are adjusted annually for inflation. The non-willful violation is currently $13,481 for non-willful, and then for willful, it's going to be the greater of $134,806 or 50% of the account at the time of the violation. And these amounts can be found on irs.gov by searching FBAR. FBAR penalties can be steep, and it's important to note that there are potential for both civil and criminal penalties for willful FBAR violations. So make sure that annually you're checking your filing requirements and reporting appropriately. This slide has a resource for FBAR material. If you type FBAR in the search field on irs.gov, a recommended site will pop up, and that's the link that's shown on this slide. It is an excellent page that summarizes FBAR reporting, and it also includes additional links to other FBAR resources. So there's a plethora of resources available for you for FBAR. I recommend that you go to this page. Okay, so today we've briefly discussed the options available for taxpayers to come into compliance. We provided a high-level overview of the streamlined procedures, and then we concluded with a mention of the FBAR filing requirements and potential for some substantial penalties. We hope that you found this presentation informative, and we encourage you to visit the resources provided for additional information. And that concludes our presentation, and we hope that you enjoyed the rest of your day. Thank you.
Thank you very much, Christine. For your very informative and educational presentation. It's that you have a great, resources and great help for our CP professionals, how to handle those foreign asset reporting, those requirements on those streamlined compliance procedures. 非常感谢我们国税局的这个 Christine Stone 这个专员。他是专门 focus 在审查这种 taxpayer 的海外资产申报这一块方面的专家那我们知道当大家如果要寻求一个 expert 时候，当你呢要找一个专家的时候呢，那你必须要了解他是不是 focus 在这个领域不是看他的年龄这个在这个行业时间有多久这个当然了经验很重要，但是呢他是不是 focus 在这个 particular 这个 field所以说你不可能去一个骨科医生那边去问你的心血管的问题所以说不管是会计师、律师、医生，他都是分专科的所以说当然你想非常的了解熟悉这方面的内容呢，你自己来去研读是不可能的那你呢作为一个 taxpayer 来讲的话，你需要能够分辨有这个能力找到一个合适的适合你的这方面的专家不管呢是会计师也好、律师也好、医生也好做房地产的 broker、agent mortgage 这些 loan 的 processor 各行各业，你希望呢能找到这个 specialize in 这个 particular field， 就是说你希望他能熟悉你想得到的这样一些 knowledge 不能说他是律师，他是会计师他是医生，他就什么都知道不行的当他知道以后呢，你还要看他有没有实际的hands-on experience 他刚知道理论，如果呢不懂得灵活运用的话也不行那 OK 他如果是专业的也懂得灵活运用的话，但是呢你还要了解这个专业人士呢他自己知不知道什么东西是可以做，什么时候不可以做，也就是说你还要了解他的职业的操守、职业道德 ethics, integrity and honesty 因为所有的专业人士我们的根本呢就是诚信把职业操守和职业道德放在第一位，在这个基础之上呢，你要找一个熟悉了解你这方面领域的，比方说你前面有出了一些问题没有不了解，你没有把你的海外金融资产这边如实的或是完整的申报出来，那现在怎么办你当然要找一个不是说他有多少年的这个会计经验的人，而是关键是他又在你熟悉的想了解的都需要帮忙的这个领域呢，他有没有这方面的实际的这个 handling 这些 case 的这些经验，这个很重要当然我刚才讲的就是说当然还要看他的为人和职业道德所以说大家不要想试着说在一个很短的时间之内能把这些这么专业深奥的这些知识了解清楚，包括会计师他如果不专门做这些 streamlined procedure 这种 filing 不是经常做这些包括说8938、547、542、114这些就是 foreign 这些 asset 或 foreign 的这些 corporation 的这样一些 reporting 的话，那他不管有多少年的工作经验来讲的话，在这个会计行业里边的话，他可能不是你想寻求的这样一个专业人士所以这是给大家一点 tips